Kitco News special coverage of the Xplor convention is brought to you by Radisson Mining.
Welcome to Kitco News. I'm Niels Christensen. Welcome to Xplor Mining Conference in Montreal, Quebec, Canada. Joining me today is Michael Gentile, Director of Radisson Resources. Thank you very much for joining us today.
Pleasure to be here. Nice to be face to face.
It is. It's nice to be face to face. You guys actually are very active in Quebec with the O'Brien project. Before we get into the project, I'd love to talk about right now the health of the mining sector. Gold prices have been in a very sharp decline most of this year. Mining companies have suffered in the lower gold price environment. What's your take on the health of the environment right now? What's the challenges that junior explorers like Radisson face?
Yeah, obviously the number one challenge is financing. I mean, I have a rule of investing in the mining sector for my management teams I get involved in is don't run out of money. And rule number two, don't forget rule number one. So obviously the key with the market being as tough as it is right now for financing, because stock prices are way more negative than the gold price in itself actually, is make sure your balance sheet's in good shape. Make sure you're not forced to raise money in this environment. They have the staying power to hang on until the next cycle, until sentiment turns around. That's a key thing with most of the companies I'm involved in. If you have to finance in this environment, you can be taking heavily dilutive terms, which would be very negative for existing shareholders. That's one thing I'm very focused on. On the macro, I'm actually quite positive. I mean, I've been investing in commodities for 20 plus years. What I like to see, I love investing in environments like this. I love investing when there's blood on the streets, negativity's at its peak, yet I have a very bullish thesis for the macro for gold for the next 3 to 10 years. You can get incredible value in the sector right now. So I'd encourage your viewers to, despite the fear, despite they may have lost money in certain names, it's a 1 in 100 investing opportunity right now to take advantage of these valuations in the market.
Do you think we're close to the bottom? I look at gold prices, I look at speculative positioning. Yeah. I'm fairly optimistic, even if we're not at the bottom, we're close enough to it. And we see a lot of these spiky short covering rallies like we've seen in the last couple of days with gold prices. How does this impact the mining sector? Is it, like you say, now is the time to buy? How do you buy in this environment? What do you look at? Because I think you still have to be very particular. You have to be, discriminate in what you buy, I think, is in this environment.
Yeah, I'd say in the macro, I think we're very, very close, if not have made the bottom already. And why do I say that? If you look at what's caused the weakness in gold prices the last 6 months to a year, it's been the incessant rate hikes of the Fed, right? This is the fastest pace of Fed hike in history in terms of velocity of Fed hike rates and number of rate hikes. So you look what happened last 2 months. Japan intervened in their currency market. The UK intervened this past week. I think the UK intervention was a major signal to the market, right? These are G7, highly wealthy, top 7 global economies in the world, basically saying that these rate hike increases are causing havoc and we need to intervene. You had the UN come out this week saying rate hikes have to stop. The impact on emerging market of the raging US dollar is going to result in famine and wars and massive instability in those countries. So if we're not close to the rate hike cycle ending, we can see the end of the tunnel. And I think gold is starting to react to that. So that's very positive, right? So that's when gold stops going down, rate hikes stop going up. That's typically the sign that the market's ready to roll. But I would say sentiment for the gold names is even worse than the gold price. I mean, it's about as bad as I've seen it. Maybe 2015 at the lows was where we are right now. Despondency, apathy. Investors don't want to go anywhere near the sector. So that's typically a great time to invest. And so, like I said earlier, if you can pick a basket of junior companies that have projects, which I focus on, that have a chance to become a mine, will become an economic project, that have good balance sheets to withstand if this market stays negative for under 6 to 18 months, you don't have to raise capital, and teams that you're comfortable that can create that value on the other side of this, I wouldn't be worried about buying these things. Maybe you lose another 5, 10, 15%, but if you have those attributes, you're positioning yourself to make explosive returns on the other side. And as you know, in the sector, when a sector turns, we're not talking about 10, 20%. We're talking about 2, 3, 400, 500% moves in some of these names very, very quickly out of the gates. So I think it's a really ideal time to be digging into the space.
So in this environment, how does Radisson fit in? The company has some really impressive drill results, has a really good resource. What are your thoughts on the health of Radisson right now?
Yeah, look, I became an investor in Radisson, a big one in 2019. I joined the board last year. What really attracted me to Radisson was we have the highest grade undeveloped resource in the Abitibi Val-d'Or camp. It's a prolific mining camp, as your viewers may know. There's 6 mills in operation within 75 kilometers of our project. Our resource currently is around 9-10 grams. So it's one of the highest undeveloped resources in the world in Quebec, in that region, underground operation. And we've done 130,000 meters of drilling since 2019. That's not included in the updated resource that will come out next year. So we did 130,000 meters life of mine previously. In the last 3 years, we spent $25 million drilling 130,000 more meters on this deposit and have yet to update the resource. So that's in the cards for investors early next year. And as you can see by our drilling results, we've had a tremendous amount of very high grade intersections. So my expectation is the resource is going to grow. It's going to stay very high grade and become even more desirable as we start to show the scale as we move towards potentially, a million ounces, within striking distance of 1 million ounces on the resource side. That's an extremely attractive deposit when you have, a combination of scale, high grade, and quality infrastructure. That's a very desirable project. Stock price aside, the stock price is now trading at a market cap below $25 million, which is what we spent the last 2 years drilling. It shows you what kind of value you can get in the camp, right? So companies well-financed, have got a good amount of hard dollars, no need to raise money in this environment. Obviously, the corporates hopefully understand the value more than the public investors do today. Yeah. But in a very strategic mining camp like that, you have a lot of options in terms of financing and ability to move this project forward outside of the public markets.
So what gets investors in this market? And it's a question I've actually been asking for a very long time. And it seems, we get really good spikes where, the mining sector does outperform the gold price, which it should be doing. We should be getting that leverage. For a long time, though, the mining sector has really underperformed the gold price, not just this year, but in few years. And the big question is, how do you get investors in? Is it a matter of time, or do we need a big discovery? Would an updated resource at O'Brien be something to sort of kick off a new interest in the mining sector?
Yeah, look, I think in this environment, like the pessimism we saw like 3 weeks ago, you could put out any kind of resource or the best hole. I'm talking to another CEO of a company, Murchison Minerals, I'm involved in. They put 121 meters at 1.4% nickel. One of the best holes in the world for nickel exploration globally this year. Stock's basically flat from the announcement, right? So you could put out the best resource in the world, the best drill hole in the world right now, and the market's unlikely to react just due to the negativity that's present. But as an investor, that's amazing, because you're playing cards and you get to see the cards in advance and there's no one reacting to them, right? And so for me, I'd be buying these quality projects where high grade resource like Radisson, Murchison Minerals is very high, one of the best of the holes of the year in nickel, and you get to buy the stock flat. In a bull market, those stocks are up 100% day one. So you're able to buy these stocks with the information in hand, knowing that when the sentiment turns, these stocks are going to re-rate. And so really what you need to see happen is the market has to bottom in terms of sentiment, the gold price has to bottom, retail and generalist money has to slowly return to the sector, and then that news flow is going to be rewarded, right? So what I think about as a company builder is, let's advance these projects. You're adding value by increasing the resource, by drilling very exceptional holes and proving to the market this thing is getting bigger. As long as you don't run out of money and have to raise money at these distressed levels, while it's very frustrating for me as the largest investor in Radisson, it's a mark, right? It's a mark to market, but it's not a permanent loss. And so as the market turns around and the market recognizes the value of the projects, the stocks can move higher, the financing window will open, and you can move these projects forward again in the future.
So what's next for Radisson? Where do you want to take the company?
Yeah, we want to get that new resource out early next year. We've got a bunch of drill results left to come out as well, about 18,000 meters yet to be released. We're targeting a resource, first half of next year. The updated resource will be a big event for the company. I think with those two things together, the market's going to see this project in a new light. We always had high grade. We always had a great zip code. Yeah. Our goal is to show scale, to show the corporates that are interested in this project that this has standalone mine potential. Outside of being in a great camp, you have the scale here for a tier 1, 100,000 ounce per year producer. Now, we're not there yet, but over time, I want to show that to the market.
Well, I was going to say, you guys are right in the heart of the Abitibi Greenbelt and infrastructure, road access, electricity, like everything is very well. And O'Brien actually was a past producing mine, I do believe, 50 years ago?
O'Brien was the highest grade producer in the history of Quebec.
Wow.
500,000 ounces at over 15 grams a ton.
Wow.
Head grade at the mill. So fantastic pedigree. On our left and right is Agnico. We've got Yamana in the camp, you have Eldorado in the camp, you have IM Gold in the camp. You have a ton of really successful, profitable neighbors next door to us. So obviously this is very valuable real estate. It's 5 kilometers on the Cadillac break. Extremely desirable position. With a resource, I think this market's going to start to see real commercial scale here at a valuation that's trading at a fraction of its value, in my opinion.
So then what's the message for potential investors in this mining sector? Is it sounds a little bit, keep the faith, things are going to improve. Is that the message you want to get out to investors?
I would go even more aggressive. I would say you absolutely need to be allocating capital to the sector right now. At these valuations, at this point in time, with the upside that I see for gold prices and metal prices in the next 3 to 5 years, with the pessimism I see in the market. I made a career the last 20, 25 years investing at the bottoms of the market, where pessimism is at its maximum point. If you want to make true exceptional returns, you don't buy when everybody's talking about it. You buy when everyone hates it. No one can stand it. They don't want to look at their portfolio anymore. Those are the opportunities to make true generational returns, generational wealth type investments in the sector. Find great companies with good management teams and good balance sheets. Close your eyes and buy a bunch of these names, and hopefully thank me in 3 to 5 years.
Well, and also too, had talked with earlier PwC about sort of the future of mining, and ESG is a big part of this. That's the nice thing about Quebec is that we do have a low carbon footprint. Electricity is generated, hydro power. Everything is sort of managed. There's really good community discussions, and the Abitibi is a mining jurisdiction, so community involvement is really high. How does Radisson look as that sort of ESG part of a portfolio? Is that something that investors should be paying attention to?
Absolutely. It's not getting easier anywhere else to build a mine in the world. Power prices are going up, social unrest, infrastructure. So if you look at Quebec, lowest cost power in the world, roads, infrastructure, power, supportive governments, a careful but visible pathway to permitting. It's not easy to permit a mine in Quebec, but there's a pathway from discovery to permitting that is clear, and the rules are known by the players involved. So if you're a global mining corporation and you want to allocate billions of dollars to build new mines in an area of the world, to me, Quebec's got to be in the top 5 jurisdictions globally, because your certainty of investment is here. Right? If you've got the mine, you got the resource, you got the economics, there's a path forward to build that mine. Where other areas, you may get halfway through that process and get unseated by social unrest or political uncertainty or other issues of permitting that may stop you dead in the tracks. So the desirability of Quebec is it's a very supportive, very clear pathway for investment and certainty of return on your capital. So that's a hugely advantageous thing that many investors don't properly assess when they're making an investment in the mining sector.
For Radisson to go forward, do you need higher gold prices? Do you think it's attractive now, or do you want to see $2,000 gold?
Look, it's one of the highest grade projects in the camp. So I could say, from a purely mining perspective, this ore that we have at Radisson, again, it's an early stage, resource pre-PEA project, but this ore should be mined, whether gold is 1,700 or 2,000 or 2,500. Where you need a higher gold price is your cost of capital. With the gold price where it is now, your cost of capital is prohibitively high. So in terms of advancing this project systematically over a $10, $20 million budget, you obviously can't do that when your market cap is $20 million. A higher gold price, what it'll do is it'll reduce your cost of capital, increase your stock price, make financing much more available at terms that are acceptable to current shareholders, and allow the projects to move forward more quickly. But I think this project is desirable in itself, and if the market does not want to recognize the value of the project, there are many corporates that do. And I'm not saying we're in any discussions right now, but I'm saying the corporates understand the value and they're planning for 5 to 10 years, not the next 3 months like some retail investors will look at. And so they'll see the value. So our job is to advance the project, highlight its value, and hopefully as a director, highlight the value of the stock price versus the actual value of the project and close that gap the best way you possibly can.
Michael, this has been a fantastic conversation. I agree with you. I think we're close to a bottom. I don't know. There's enough volatility in the markets to signal a bottom is near. So it's going to be really interesting. I constantly wonder about, what is it going to take to get investors into this sector? And it just, if you want protection, if you want diversification, the mining sector, it's it. And I don't know what it takes to get the generalist in this market.
If you say, and there's a lot, I'll finish one more thing. There's been a lot of negativity around gold, right? Yeah. And if you look at gold, how gold's performed, bonds are down 20 to 25% year to date. Equities are down 20 to 25% year to date. Gold in US dollars, which has been a monster, is down around 3 to 4%. In UK dollars, in Japanese dollars, it's at all-time highs. So I don't quite understand all the negativity around gold. In terms of a store of value, a protection of value, it's probably the best performing asset other than US dollar paper in the world right now. So I think the negativity towards gold is misplaced. It's done its job. Bitcoin's down 70% off the highs, right? Tech stocks are down 80. Mainline stocks are down 30. Gold's down 3 or 4 in US dollars and up in every other currency you look at year to date. So I think the negativity around gold is completely unfair and misplaced. And when that rate cycle stops, like you saw in 08 and 09, gold was the leader out of the gates and never looked back. And I think that's the cycle we're entering into. So I'd encourage your viewers to think about that holistically and say, how bad has actually gold been the last 12 months?
I agree.
Pretty darn good.
And also, I've talked to many mining analysts, and they've anything above 1,500, anything above 1,600, it is still really good for the mining sector. I mean, okay, maybe profit margins aren't as good as they were last year, but they're still solid. They still have cash on hand. And now the question is, as you say, what do they do with that cash?
Think back to 2015, the last negativity I saw. The major corporates, the Barracks, the Freeports, the mid-tiers like B2 Gold, they were dying. They were massively levered, negative cash flow, selling off assets at fire sale prices to stay alive, right? That was the same time, and the juniors are trading a similar pattern back then. Today, their balance sheets are pristine, the majors. They're generating, like you said, significant free cash flow at $1,700 gold, yet the junior sector is trading like the gold sector is going out of business. It's a very different environment. When Freeport-McMoRan is trying to stay alive, good luck investing in a junior. Today, those companies are on the prowl looking for new assets, generating free cash flow, pristine balance sheets. So that's why we're saying with the valuation gap between the junior exploration companies and their fair value, it's much more likely to close today than 2015, where everyone was dying at the same time. So I think that's another key point from this part of the cycle.
So basically, despite all the negativity, the sector and the junior sector is actually quite healthy then.
The outlook is healthy. It doesn't feel healthy right now. The stock prices don't feel healthy, but to me, the outlook is quite strong, especially versus the stock price. And that's how you make money in the market. Yeah. Your view is positive and the market's view is negative. If you're right, you're going to make a ton of money. That's basically what I've done in the last 20 years.
Well, thank you very much for that optimism. It's been a pleasure talking with you.
My pleasure.
Thank you very much for watching Kitco News. Stay tuned for more coverage from Xplor Mining Conference.
Kitco News special coverage of the Xplor Convention is brought to you by Radisson Mining.